Good afternoon, traders. Stacey Burke from Stacey Burke Trading. Daily currency levels for the British pound crosses Wednesday, June 17th. Nothing scheduled on the calendar for Wednesday. I've had a few traders message me and ask me some different questions about our daily levels videos, and today we're going to maybe try something a little bit different. Traders have asked, a lot of traders have emailed me asking me to spend more time just daily levels and then specifically on the 15-minute charts, which we'll do. So I'd appreciate any feedback you have. If you'd like to see more 15-minute, let me know. I usually break this down from the dailies following the bigger picture, but today we're looking at the British pound Aussie. 82.50 may be a significant level for support or resistance. We are in a major downtrend at the moment, but the market has consolidated. We had a trendline break, a week retest. We're going sideways at the numbers. We're in the middle of the week. We could certainly still retest the lows of the month. 82.50. On our 4-hour chart, we can see the market made an attempt to go back up a third time underneath the peak before dropping down below 82.50. And then attempting that yesterday and pinning the high, so stop hunt to the high before pulling back, currently retesting 82.50 again. We have stops under the low of the week at 81.46, so 82.50 will obviously be significant. If we take out the low of this bull candle, 82.25, that could become significant as we could certainly head towards the lows of the week on a measured move. Pin to the high. Third push, 82.50 could be significant. On our 15-minute chart, we can see that we're in the middle of the range between the high of the week and the low of the week. We have had 3 pushes, though, to the high, Friday, Monday, and then Tuesday, pinning all inside of the peak formations, and then a 1, 2, 3 in Asia today. We'll blow this up a bit. So 3 pushes in Asia before dropping down, stop hunting back into the traders that were short, and breaking down as we head into the open of the Europe-London Open. So again, possibly stop hunt back into this break for a move back down through the lows. The U.S. session stops below the U.S. session lows, and of course the low of the week. And again, we said 82.28 in that area was significant for support for the lows of the week, and then of course our 81.50. So we're 100 pips off of that roughly, after 3 pushes to the peak, and then 1, 2, 3 today. So again, depending on how we handle this in the Europe-London Open, we could see stop hunt high for the sell, or this market could just consolidate, retest the highs. But if this market was to trade off of the 82.50, 82.25 level and take out the lows of the day, we could see a move down to the lows of the week. Pound Canadian. Looking at our daily chart first, we see the 7,000 level, again potentially acting as support. The market pulled back on Monday before reversing off the highs yesterday into the 7,000 level. So again, we're currently at a spot where the market will either find support or break through and possibly find new selling occurring at the 7,000 level. Breakout pullback possibly on the Monday, Tuesday. Again, we can see on our 4-hour that engulfment at the high. And then we have a 1, 2, 3 down, but we also have a 1, 2, 3 extension at the moment into the 7,000 level. So right in the middle of this range, a larger ascending triangle, but possibly also a double top formation. If the market was to head lower below 7,000, a measured move of this takes us initially to 68.25 and afterwards to approximately 66.40 area. So again, possibly the 7,000 level, we need to watch that. The market's been trading very, very cautiously back and forth across that area. On our 15-minute chart, we can see the market has just broken Friday's low, extending out the lows of the week. When we zoom in, we can see that this 7,000 level again is potentially acting as support. A stop hunt back to the high would put us up around the 770.35 area. And again, the market has highs up at 71.75. U.S. session swing highs in that 71.10 area. But we have had a breakout from this level at 70.62. If we zoom out a little bit more, we can also see that the U.S. session swing lows at 70.50 also was a breakout level. We took out London's lows, and that's where today's high went to. So again, we could see a breakout pullback to 70.25 for a retest of the lows and possibly the beginning of a move down. But currently we're on sideways at 7,000. We're at the lows of the week. Just in terms of geometry, if we were to break this, we can see where that double top formation's peak was. And again, a full extension of that range, if we were to head down, takes us down towards this 68.25 level. Next up is our pound Swiss. And on our daily chart, we can see that move down back below the 1.2 thousand level. The market has held that Friday, Monday, Tuesday, still underneath, pinning above but pulling back and consolidating beside that yesterday's candle. On our 4-hour, we see that pull back to the 2,000 level, a second attempt, and then an engulfment in that 4-hour window, and then a doji underneath of the engulfment, which is certainly very bearish, but we're also inside of that consolidation of the breakout from Monday morning. So a very tight range between 1960 and 1920, a 40 pip box approximately. When we go to our 15-minute chart, we can see that we've had a break. Just if Monday's high was the peak formation, we broke through that yesterday, but we've one push, two push, three pushes in a double top formation that we broke through into the close and then pulled back into this morning's Asian session before retesting the lows, breaking through yesterday's low. We're inside of the high and low for the week. Currently, the market is pulling back above this middle structure, which could be the beginning of a stop hunt back up towards the high of the day. We do have shorts that were in the market just below the peak formation candle at 1959. The market is making a bit of a double bottom formation, and this could be the beginning of a retest back up. If that failed, we could see the market roll back over, taking out the lows just below that 1925 level for a move back down towards the lows of not only the U.S. session below 1900, but the lows of the week at 1863. Our pound yen, again, similar, we pulled back underneath of 13500, so all pairs are trading around significant round numbers before pinning and reversing on a bear pin hammer. Consolidated sideways, currently just below that 3500 level. There's room to fall to the low of the week from yesterday at from Monday at 3350, and that could make 3250 the next target for support and possibly a move back into that lower range. On our 4-hour, we see that engulfment from Monday morning took us up high, stop hunting traders that were short, but that failed on a second little attempt before dropping back down before the 3500 level. So 3500 obviously could become very significant for selling. If the market was to break through that, then obviously we could see a retest back up towards the highs at 13633. But if we fail at 3500, we could see this market head back towards the lows at 3350. On our 15-minute chart, we can see that we're inside again the highs and lows of the week. Just zoom this out. Big box between Monday's low and Tuesday's high. We are right in the middle, and we're just below that 3500 level. When we zoom in, similar, we can see that little reversal happening as we speak into this Europe Open. We could see a stop hunt back towards the high of the day. If we fail at or around this 3500 level, we could see a revisit to the lows of the day back through 3440, and of course back towards the lows of the week, end of the month, back down towards 3350, and Monday's US session swing, or London's session swing lows, at 3415. So we're making a big strong move up as we speak. This could be a stop hunt on traders that are short, just below 3,500. So even though we're seeing this reverse W formation, if the market fails to get through the high of the day, we could see a retest low, or we could see a 1, 2, 3 to the high, a pullback, and possibly a breakthrough 35.25 for a move up towards the 3,600 level. Pound New Zealand. On our daily chart, we can see that consolidation is still fairly tightly bound underneath the 1.9500. So again, significant round numbers. We pinned through that yesterday before pulling back. So the market has attempted, but at this point not been successful to get back above the 1.9500 level. And on our 4-hour chart, we can see that breakout pullback with a engulfment and pin hammer reversal to 1.9500. So very possible we could revisit the lows just below Monday's low at 94.25 and even head further down lower between the lows of the month at 93.70. On our 15-minute chart, we can see, similar to the other pairs, we have Friday's high, where we broke through the U.S. session highs yesterday. We've got a big box for our geometry between Monday's low, Friday's high, which yesterday we pinned through that, but we also had 1, 2, and a 1, 2, 3. Okay, so a 33 up top before dropping below those peaks into the close, consolidating, and we've had 3 pushes in Asia today. 1 push, 2 push, and a 1, 2, 3 to the high. We've broken through that lower boundary support at the 94.75 level, but we're currently just retesting that breakout. The market stayed inside of the Asian high-low. We're still inside of yesterday's range, but we're inside of that lower boundary from this morning. So if we break out, pull back, this 94.75 could be significant. The market's heading lower as we speak to the lows of the day, but we have had 3 peaks put in, so a breakout pullback scenario might be on the cards for a retest of yesterday's low and the lows of the week down at 93.73. Currently trading between 94.75 and the lows of the day at 94.60. Lastly, our British pound. So this pair again, we had the pullback. We've gone into a 2-bar consolidation before pinning back up top. So traders that have been short have had a stop hunt high, but we're still tightly consolidated between 2,500 and that 2,600 level squeeze. Again, similar, we've got significant round numbers. All these pairs are trading around major round numbers. On our 4-hour chart, we can see that second attempt to push through failed on that smaller bull candle before reversing, pulling back underneath of that 3-thrust pattern structure that was the original breakout, but we've stayed above 2,500. So we're in the middle of the range right now on the pound, right in the middle. On our 15-minute chart, we can see again high of the week, low of the week, and we're right in the middle. So currently this market hasn't given us a clear direction, although we have broken through yesterday's middle structure. So we could see a stop hunt back towards the high of the day at that 25.80 level, 25.85 level, and our low of the day is down at 25.40. So we've started to expand the range, but again, a peak formation candle from last night's swing high at 25.92, the break of that. If this market was to take out the low just now that we've made in the Asian, just in prior to the Europe Open at 25.50, we could see this market head back down through the lows of yesterday's US and London sessions towards the low of the week at 24.50. Just closing on a quote: what you do today can improve all your tomorrows. Focus on 1% improvement every single day, traders. Make this your best trading day ever. Stay focused, stay disciplined, keep it simple, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, The 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.